is the deal? How y'all doing? So let me check the date. Today is August 5th, 2024. And over the last 8 hours, oh man, we have some excitement. We have some volatility. We have some recovery already happening. I had some DCAs early this morning that, man, I feel good about already because those positions are up. Um, but yes, we have some global unrest going on, spewing from just a lot of the economic data from the US, spewing from Japan and their issues over there with the Nikkei and their stock market and their currency. A lot of things going on. And it's a lot of fun when you can just soak it all in and understand this is a small blip in the long term as an investor potentially, right? And so, but there's opportunities that present themselves, and some people can see it as opportunities. Other people can say, "Hey, I'm tired of this market. I want to get out." Whatever side that you want to be on, that's on you. But the market is going to show us a story through the days, through the weeks, the months, and the years, and we might see some interest rate cuts coming more expeditiously. Who knows if the Fed may have to do an emergency cut because of all these things happening. So thank you guys for coming in. Smash the like. If you have not subscribed, consider subscribing, because what I'm going to do today, I'm going to try to make sense of a lot of these things for you guys. I'm going to show you guys the data, the charts, show you what's going on with these currencies. And I've kind of strayed away from this a little bit because it can be a little technical understanding a lot of this stuff, because the currency market is attached to the bond market, which is attached to the derivatives market, which is attached to a lot of things, right? So all these things are interconnecting. As we know, Japan and the United States are allies. They work closely together. Japan is the largest bondholder of United States bonds. And so we need to take a look and see, where do we stand? What's going on? And try to get a good basis. So with that being said, appreciate y'all. Let's check the chat. Who we got? Let's go, baby. It's time to go. On Patreon, I put out a video late last night saying, hey, hopefully y'all are taking a look and understanding that, where we're at in the business cycle. This is different than, for example, 2021, where we've already had an expansion of liquidity, where everyone is levered long and already exercised that option to borrow a lot of cheap money. We're at the exact opposite side. So we're at the bottom of the business cycle, where money is hard to get, where we're on the precipice of lower interest rates, meaning that capital will free up and potentially people can borrow more. And we know what that does in markets. So typically the Fed, they want to cut rates when there's some type of issues or structural problems within the economy. Well, the unemployment starting to tick up. The SOM rule, all these things that are now talking points, they're all talking points. But at the end of the day, what we've got to realize is people will shuffle their money due to how they feel. A lot of people feel fearful going into bonds, going into different things, right? All these bond rates even. So the yield on them are going down, meaning, hey, people are buying them. So when yield goes down for bonds, that means people are buying them. Therefore, they're running to safety. And they think potentially, who knows, there might be another war coming. So multiple legs to this that are trying to get a stronghold of markets. But I really think within 30 days, we'll have a clear view. But I would say take a look at some coins that you may have some interest in. And if you're like, I'm not quite sure, stick with the stuff that's in the top 5, like Solana and Ethereum potentially might just be the only options for you, just because you're not 100% sure. Because why, you probably feel that you might be able to hold on to them for 5-10 years no matter what happens. That's the way I'm kind of thinking about it. So yeah, we got a lot of things going on. What else we got? Let's see here. Yes, sir. Catch the replay. You're not going to want to miss this one. And of course, I already know Wade, what's cracking, making the moves, right? When you're alert, when you know what's going on, you have the confidence, and Wade's got it. He's got it. Let's get it. Let's go. Ready for some hopium. Well, I can give you some realism. These one thing that Richard Hart says all the time is you got to be honest about the volatility. Like, yes, things can go down 25, 30%. It seems in a day. Some altcoins have been shellacked as well, but I've also already seen some stuff already recover, like off these local lows from like 4 to 6 hours ago, recover like 30% as well. So it's a two-sided sword here that we are looking at currently. Oh, let's go. So thank you for the info. And so, I've been reading upon this as being a eventuality or a potential, but the Fed announced an emergency meeting today. So let's actually go and do that research and verify and see. But they're like, yeah, we may have to step in and help out. We need some easier monetary policy when the Fed has to do emergency actions, like how they had to do in 2023 with the bank situation, these banks collapsing. So Silicon Valley Bank and some of these other ones, right? These are times to pay attention to and look at markets and say, hey, do I want to be on the fearful side or do I want to be on the side of saying, hey, this might be opportunity? So yeah, that's all good info. Very, very nice. So let's start. We can start by looking at charts. We can start at looking at some of the news information. We can start looking at some of the on-chain information. Like, there's a lot of stuff to look at. Let's see. We got some time here, so we'll see and kind of put around and go from there. I kind of just want to start with some of the news that we're seeing, so let's do that first. All right. So we have some things. Broad-based. Looking at this, let's look at some stocks. The Magnificent Seven stocks erase $1 trillion in market cap. Yeah, sounds about right. Down hundreds of billions of dollars. And Jay Powell, like, hey, what's up, you guys? I'm kind of the reason, not wholeheartedly, but I'm part of the reason why everybody's fearful, because I can be honest and say we're having a hard time. So yeah, and they do their job late. So that's an interesting visual, kind of what's going on here. But yeah, the key thing is this, like looking at these treasury yields. So they're falling, okay? So especially over the last week, but now we find mean reversion where the 2-year is slowly starting to get below the longer duration bonds, that's the correct curve it should have. It's not inverted. And typically on an uninversion of a curve, going back to normality, yeah, you're going to see some volatility. Like, we're going to look at the VIX here in a second. And the VIX is a good indicator on letting us know, like, hey, how serious things are in volume terms. So, we've got that. Let's put around. So we can head to the bookmarks. And pretty much that's kind of what the people are doing in traditional markets, but then also here in crypto land. Like, everybody's like, sell. We don't know it. And a year later, they're gonna be like, oh yeah, you remember that time during the summer of 2024 when everybody's going crazy? Man, that was a crazy time, right? And we'll forget about it. And we'll be moving forward with higher prices in the years to come. That's all I know. So it's never been any different. Recessions don't long last than bull markets. It's simple. So anyways, so yeah. Now this is interesting. Okay. Let me actually pull this up. Just in, and this is probably a couple of hours ago. So we got indications. So we got people like Charles Schwab. We got Fidelity. We got Vanguard. These are major market players. These are institutions that, create a trading desk and allow people to swap assets, buy and sell, all that kind of stuff to take their fee. But they went down. And this is why crypto exists, because they can put all these halts saying, all right, no, we don't want this to happen no more. Or, hey, we want the insiders to get this certain pricing and not the retail folks. Like, this is crazy. This is crazy. This is why crypto is invented. Is you need to be able to transact when you want. And when them being down for whatever, if it's an hour, that's too long. That's your freedom being taken away from you. So that's just one use case of crypto that's being seen right away. TD Ameritrade, like, it's crazy. So yeah. Now we've got some things else happening. President Biden's senior economic advisor. So the guy telling him how things are supposed to work economically is leaving. He's like, I'm out of here. Crazy. And of course, we're going to have a lot of volume. So if you look at this here, we see that BlackRock spot ETF surpassed $1.5 billion in trading volume in the first hour today, a few hours ago. So we're going to see what it ends up being at the end of the day. But there is a lot of people moving money in the US, Japan, China, everywhere. People are like, it seems like they're trying to get in a bunker right now of safety because they're like, man, I don't know what's going on. And then they might poke their head out. But the people that have the gall and are like, let me actually take some opportunity while people deleverage themselves. Let me actually go ahead and get some steaks, right? Let me eat up. And this may be an opportunity. We could go lower. But is today's price lower than what we were last week? Yeah. And so would you DCA on a lower price if you were an investor? Possibly. Don't let all the rigmarole detour you too much. Obviously, we need to take some credence because, yeah, we could have a longer duration instead of just a couple of days or a couple of weeks of down action. Could be a couple of months. But once again, the statement I'm saying is true. Bull markets last way longer than bear markets, and recessions typically are blips on the radar over a span of 10, 20, 30, 40 years. That's a fact. So know the facts, play the game by the facts, regardless of what you feel. So yeah, there's a lot. Let me see what y'all got. What's in the chat? Yeah, because this is a statement that we need to think about, because typically when there's some type of duress with a ally or the United States themselves, just like the bank term funding program, how they had to come in and inject some liquidity, is like what, $50 or $75 billion just boom in a week. This may be one of those situations, which we already see the M2 money supply already curving up already. So this is just going to help that happen even more. So that's pretty dope. Salute. Holding it down. What's good? So, a lot of stuff going on. Richard, making it make sense, making it plain. Look at this, y'all. There's a lot of red. To the average person, they're like, oh my gosh. But literally, on a 24-hour basis, there's some stuff that's wrecked out here. Like, and I think that potentially this is a week. I'm sorry. It's probably a week or a couple of days, but you got stuff that's 40, 50% down in a week. Bitcoin down 25%, Ethereum down 31% at some point, a few hours ago. Like, welcome to the volatility of crypto, you guys. But guess what? These numbers could look the exact same here in green in about a day or two if it gets back to where the prices were. So that's the beautiful thing. It's just like volatility is a thing, but if you understand the positioning, then it could benefit you, But yeah, this could be scary to a lot of people, but that's what the crypto market can do. So for sure. Interesting site. Now, this is coming off the back here in the beginning of this month, 4 days ago, the Bank of England. So they're another powerhouse. There's the United States. There's obviously the PBOC. There's Japan, England. So, we've got these other regimes in other countries going down on interest rates. Now, Japan did the exact opposite. They went up on interest rates. So let's talk about that, okay? So what we need to do is we need to go to JPY USD and look at this ratio. And we'll get a brief viewing. So you had a nice expansion right here, the data set that we're looking at, a nice expansion of where the Japan yen, so Japanese yen, is outpacing the dollar significantly. And this is a 30-minute chart, so we're actually in the weeds right now looking at this. Well, their currency is going up. Let's talk about a little bit of the economics behind this. Like, why do they keep artificially low interest rates compared to other nations? Well, they have a crisis because, one, they're not a large exporter of goods and services. And at the same time, they can have too much economic growth, so too much inflation. And so in times of their economy actually doing a little bit better, they try to suppress that. So what do? They actually went up on interest rates. So they have a carry trade essentially that they are doing where they're using U.S. bonds and saying, hey, we can actually get that yield, that nice yield over there to get some type of growth and wealth in their country and not using their own bond system. But the thing is, people in Japan, they will start to use their own bond system when they have less faith in the United States. And this is what happens. And then when these interest rates go up across the board, and then they have to go up on their interest rates, people in Japan are like, oh, snap, hold on. Forget all these U.S. stocks. Forget all these cryptocurrency coins. Like, let's go into bonds. So when people go into bonds, and they'll even go into U.S. bonds even more. So now, if we look at the 2-year, so let me see if I can find that. Let's make it make sense for you guys, okay? So we type in U.S. 2-year. It all works together. The 2-year fell off a cliff, right? And it's about rate of change, you guys. So rate of change. It fell off a cliff. Now, mind you, this is a 30-minute chart, but it fell off a cliff starting about a week ago, but tremendously starting here. Like, that rate of change is crazy. And so when the yield is going down, so let's write that out. So if the yield is going down, that means people are buying them, acquiring them, going to safety. But as you can see, it's now started to come back up. So we might get a mean reversion of now asset prices starting to also come back up slightly. It's all one trade when people get scared, you guys. Why? Let's go through the list and look at everything. We can start with Bitcoin, and I'm going to show you guys this, this type view. We're back at 55K already, but you realize how Bitcoin chart looks just like the mean reversion for the 2-year. So that's going to look like that. We look at the S&P 500. This is going to look the same with the bounce. It's all one trade. Ethereum chart. Look at that. Recovery, bounce. Guess what? We were eating right here. Vulture Crypto Patreon. If you're a part of the group, you got the signal. And we'll see. We may come back and challenge these lows again. We don't know. But then again, we could also go back and revert back to $3,000, where we just were not even, a week ago. So opportunities present themselves. You buy something at 2,100, 22, and it goes back to 3. Let's keep on going. What else? I mean, we can even go down, some of the list of altcoins. Phantom looks the same. Gala looks the same. Why do all these charts look the same? Liquidity bonding is part of it, right? But it doesn't matter if it's small or large, even the recovery. So Alluvium, IMX, Near, right? Even stuff larger cap, Nvidia, bounce back, right? Ondo, bounce back, huge bounce back. Man, I'm going to have to show in the chat. I'm going to show a buy order that I had for Ondo. I didn't get the exact, but man, I feel really, really good. I feel really, really good about capturing before this big old God candle back up. Why? Because I know BlackRock, they got some hands in this thing, right? So, of course, it's going to be outperforming because BlackRock is in the middle of they're in the know of everything. Ondo is a proxy to betting on BlackRock, if y'all don't know. But same thing, things like, Pith, like everything is bouncing back. Over the last hour and a half, give or take 2 hours. XLK, the tech sector, bouncing back softly. Others, cryptocurrency market cap, alts outside the top 10, bouncing back. So we see that the little stuff is hinged on the big stuff. And we know the bond markets are where the most money is at. Let's take a look at the broad market, so not just crypto. So how do we do that? Let's go to Koifin. So this is a mega stream, you guys. We're putting all the data together to help us understand the story. So Japanese yen at 144 compared to the dollar. But on the last day, like, let's look at, the Russell 2000, the NASDAQ, the S&P 500. Looking on the daily, but then we can even look at the 5-day. The sectors are not as important. U.S. Treasuries, so we'll click that on. But then what we need to learn and look at are these global yields, okay? And we'll go to that here in a second. So on the day, they opened up, and a lot of them were down. XLK tech sector was down 6.5%. XLE, so consumer discretionary and energy and whatnot, down 2.5%, so less volatile stuff like that. SPX down 3.8%, but now they've all mean reverted and come a little bit higher. So XLK, really striding, so eating back up some of those losses from early this morning on the open, and we'll keep watching that. But on the 5-day, what are we looking at? We're looking at some just disjointing, really, really starting, that downtrend. And we're looking at, and it's crazy what's like, and why is that the end of the month, right? And then on the 1st of August, we get all this volatility. This stuff is not by accident, you guys. These things are timed. These entities that have to make moves when they need to make them. None of this stuff is a coincidence, but we have to be able to facilitate and understand. And as you can see, we are trending lower, but now we're starting to recover. You see the gradient on this past day. While we're, at the beginning stage of today, we'll see what lunchtime looks like, and then what the evening hours are looking like, but we're trending back up. So we'll see if we see follow through on the rest of the week. But if we click into these global yields, let's take a look at that, right? We could look at any yields, but really we want to focus on U.S., so United States. And also, we potentially could look at Japan here. So firstly is the U.S., obviously. So let's bring that up. So right now, currently, we have the 10-year and the 2-year. Let's pop up the 1-year and the 5-year, and then also the 30-year. So this is something that we call the yield curve. Now, this looks different, but essentially how it's supposed to work in good economic conditions, supposedly, is that the longer term duration, so for example 30 years, should give you a higher yield than the shorter term. But as you can see, the 1 year is giving the highest yield out of all three. So the way this should read is should say 30-year, 10-year, 5-year, 2-year, then 1 year at the bottom. So there is an inversion, but the main ones that we do look at is the 10 to 2. So the 10s and 2s to give us the best reading. Okay. So what we'll see is this is what they call the spread. So for example, if the 2-year has a large spread against the 10-year, that means there's some type of unbalance. But then again, typically, when we start to see deterioration of economies is when you have the inversion, and then you have the 2-year now actually going below the 10-year, how it should be, and it goes back above that midline and mean reverts. That's when you start to see the markets start to freak out periodically. Now we look at the durations, and I did a stream a while ago, maybe about like 8 months ago, 9 months ago, if I remember correctly, when we talked about how recessions happen and what's the average duration and how the markets react. They're forward looking, X, Y, and Z. So the markets are going to move prior to any recession call. But we're seeing how now the spread is basically dwindled down to almost nothing. We're talking about a percentage of a point, a tenth of a point here difference. And it looks to be pretty soon that the 2-year is actually going to be lower than the 10-year very soon. So these dynamics, seeing this, you see how so Japan, their yields are much lower than everybody else's. And you ask why? They have to do a thing called yield control, okay? So once again, they're in a position because of their economic status, them not having a lot of trade export. They have to keep these yields at a moderate rate to keep like local expansion and business, growth. But if inflation becomes an issue, then they got to go up on yields, and that caused a major problem for them because they just went up on their interest. So, the United States probably got to come to help the situation. But as you can see, the 1 year is higher than all the rest. And this spread between the 1 year and really the 2 year is still pretty vast. We want to see, and if we do see compression, where basically we see the 1 year actually going lower than the 2 year, and we see the rate on which that happens, that's going to tell us the severity of the issue. So this stuff is all about rate of change, hopefully, if that makes sense. So with this, like getting close, for example, if we're kind of looking at the latter end of these two rates, the fact of them being separated is not too much of the issue. It's about like how quickly do they get closer together. That rate of change is what sends people in a loop. Okay? Because it's a little bit more unpredictable. Does this stuff make sense? It may not. But there's some basic information on rates. Let's look at the VIX, okay? So, the VIX is at 35. Now, before I start talking about this VIX, do y'all feel the volatility, right? So what we're feeling is this. We've been doing this, just patterning back and forth, back and forth, back and forth, back and forth. And then what we just got, that volatility kicked up, starting on the 1st, but really kicking up really on the 2nd. So Friday's closed and over the weekend. Now, if we put this on a 15-minute chart, now the volatility is coming back down. It's not staying up. Okay? So what we're going to do is we're going to put a line here. So let's put a line here so we can get an idea of like, hey, what kind of things happen to the market when the VIX gets this high? Do they sustain? Does the VIX stay high, or does it revert back to where it was? Like, we need to talk about these questions. So let's do a horizontal line here when the VIX gets to 65. And let's now go ahead and look at this on a larger basis. So the VIX got to 65. You want to know the last time the VIX had this much volatility? COVID. Yep. And the time before that, the great financial crisis. Right. So if you're looking at this moment and you're like, man, I don't know if I should be making some moves here, then you are missing the big picture here. The VIX don't have this type of volatility often. It's years in between. And when it does happen, you notice what happens after. It hits its peak and the volatility slows down, and then it mean reverts back down to where it spends majority of its time. It finds a baseline. So for example, that baseline is here, this yellow line, because that lines up right here after the great financial crisis, but then also it lines up after volatility for COVID, boom, right here. Same line. So we got up there at 65 and we're already back at 35. Volatility is slowing down. Typically, volatility bumps up like this when what? When the market is fearful and capitulation. So I have these boxes here. I mean, this is what I first started to stream about, to teach people about volatility and derivative space. When we have these outliers, it's very important to pay attention to. And what we have is an outlier event, you guys. These are always opportunities in markets. I would show y'all the PCC. We could look at the NASDAQ stocks above the 200-day moving average and all that stuff. But no, I'm going to leave that for the guys and gals in Patreon. If you want access to more detailed information on this topic, definitely jump in the Patreon. Let me see. Like I put a video here 10 hours ago. So, when things are happening, kind of explaining things while things were hitting that local basin. And so, yeah, definitely, those in the Patreon took advantage of the understanding before, here on YouTube. But, we got some things going. Now, the dollar is coming down, but now it's getting a little bit of recovery as well. So many things happening all at once. We're going to see, hopefully, we get some more information from the Fed with this emergency meeting. But this is fun, you guys, really analyzing the markets and seeing how people respond. And if you're selling a bag out of fear, then most times you're catching yourself off sides. Let's see. What up, Black Label Expat? How you doing, brother? What's good, Art? Hope everybody's enjoying the show. Sit back and watch and enjoy. If you don't want to take action, cool. Should grab more? That's up to you. I did, but don't just do what I'm doing. Do what you feel that you're comfortable with. But typically on capitulation events, throwing a little bone out there. If it's not going to make or break you, or if it's not going to break you, why not? It's the way I see it. Typically, when I've done that in the past, it's helped out on the portfolio getting better cost basis on the long duration goal, which is a whole good assets for a long time, So yeah, cool. Navin, what's good? You made it. What's up, brother? So how are you taking in this Red Monday? I'm enjoying it because I've seen it. I mean, if y'all are on the Patreon, we talked about the downside risk being a high potential here, and yeah, we've got it. So, this is nice to see. Nice opportunity to get, like, I have coins that have a lower cost basis than when the price is at now. But, some of these alts that I'm just like, man, I wanted to get a better entry point, for example, that I have been eyeing literally since March. Oh, yeah, like much better entry point than March. So, now I'm getting into a few new positions, which I'm grateful for. Like, that's a gift. On things that are in their first cycle, alongside with filling some bags on things that are going into their second and third cycle already. So yeah, these are opportunities, y'all, to say the least. All right. So let's look at the fear and greed indicator. Like, I'm surprised that it's only 26 on today. Let's actually refresh that. So 26. So we're in fear. I coded up some stuff to where you can actually see this on the trading view chart for your individual asset. Like, some of these coins got like 7 or 5. Like, let me look at Solana. Like, Solana, let's bring up Solana. Oh, look at that recovery, y'all. I think I was able to get a buy order for Solana at like 120, something like that. So like somewhere in here, we're at 132. We'll see because learn to look at the wicks, you guys. When we have wicks like this, that means there's bid support when you have a long red wick and then a long green wick. This is an 8-hour chart. We'll look at the daily here tomorrow. But typically those tend to be local lows. Not always, but a lot of the time. Because, these are market volatility, So Solana, let's look at the fear and greed indicator. So let's go to the invite only scripts for the folks in Patreon. What are we looking at? Boom. Okay, here we go. And let's look at the data. So, so Solana had a nice reading of, about 17 back to 26. Last time it was there, it was, July 4th where we came down to 11. And like basically all these local lows is when we seen extreme fear. And let me actually put this on the daily. And then so yeah, like these local lows right here, we find ourselves getting close to that. But look at the volatility, the pace in which it got down here. We were at 94 literally 4 or 5 days ago, and it went down to dang near 26. Like, that's fast rate of change. Look at this wick right here, y'all. Like, we ain't seen a wick like that in a minute. So, but it's nice to see Solana having a little bit better rigidity and, better chart structure than even Bitcoin, and Ethereum. It's nice to see. So I like that. But once again, last time that we were at these levels was, down here in October, where we had a lot of A lot of scared moments like here, June. If y'all remember the whole bank issues back in June of 2023 was right here. Similar looking wick. And, what do we find from that? Solana goes from a price of, we're talking, $15 in short order down to 30. So it does a double in, 2 weeks to a month's time frame. But then we had that liquidity push in October where all assets got pushed up. And so, you're lucky with this opportunity. So once again, the fear and greed can help us understand sentiment. And the last time we were even lower, in this range 7, 10 on the fear and greed index was the bear market. So yeah, the bear market has come through. We're in the middle of a bull. And so these are gifts. That's as simple as that, y'all. So the fear is in the air and we love it. We love it. So let's go to X and see, is there any new information here while we're on stream? Let's check it out. Anything. Besides the fear, like that's all we're going to see today is a whole bunch of fear, which, hey, it's part of a market. Anything about the dip, the actual dip, the dip of the dip. Yeah, that's why you just don't put all your money at once. Like it's okay to scale into assets. Chances we dip some more. There's always a chance we dip more. That's why you do a little bit at a time and just do what you're comfortable with. Let's see. Anything else besides random, political videos? What does this guy say here? So the warning signs were here. Ether BTC is a great indicator for understanding the health of the altcoin market. All he's gonna do is just bash the alts. No interest in really talking too much about that. Let's see. This was earlier this morning. MicroStrategy and Coinbase down 24 and 18% pre-market. Yep, but that recovery has started already. We'll see where we find ourselves at the end of the day. Interesting. Yep. Taiwan. So stock market crashes the worst day in 57 years. I guess we can segue and look at that really quick. Or so look at the Japanese stock market. So okay. So we'll look at the Nikkei. And capitulation. Capitulation is on the menu. This is the daily chart. And it basically gave back so all of its 2024 gains, it gave back. Started here in July, but then finished off in these few days here in August. But look at that wick. That recovery has started. Like we want to put this on like a 4-hour chart or even a 30-minute chart. Like, it started to see recovery. But that doesn't mean the issues are done, because the thing is, with this going down like this is going to mess with a lot of Japanese companies. It's going to mess with a lot of Japanese banks. Like, we were also saying that 2 of the largest Japanese banks are actually down real bad too. And the key is the key word contamination. We've seen this last year. Excuse me. Is there contamination? What U.S. banks are affiliated with these Japanese banks and liquidity, all that kind of stuff. So, seeing some recovery, but yeah, this is the worst day that we've seen. And what I did was I kind of measured it out. So a COVID type moment where things got to get rescued. Because that's the system that we're in. If you look, so COVID was a situation that was a 30, for, the Nikkei, that was a 32% down draw. This is something of the same type of severity and price drop. Let y'all know that what we're living through is something to be highly, highly alert about. Just like how COVID was a great opportunity, and where people are like, yeah, I don't know, all this fear. Like, okay. Cool. You can sit on the sidelines if you want. It's up to you. If you want to stay safe, stay safe. But as you can see, the recovery did happen, even if we want to put this on like a 30-minute. So let's jaunt over there if we can get that far. Let's actually do the 4-hour first. And so, can we get some relevant data? Hold on. Go back to the daily. Okay, we'll stick with the daily and just zoom in here. So it had a 32% down draw, the Nikkei, from COVID, 4 years ago? And how long did it take to recover almost fully? I'm going to consider this point to be, almost fully recovered. This is liquidity injection, because we'll look at, how all these markets bounce back. So it went down 32%, but came back 43%. And that took about 2 months, or no, a little bit longer than that. So 81 days. So 2.5 months, give or take. And then you got to ask yourself, man, did we get this price ever again? The answer is no. So off the back of these crazy volatile times, and if we match the VIX up, once again, the VIX is going to show us. So let me put the VIX, match that up during this volatile time. Boom, the VIX is in blue. So let's make it make sense by putting it on the same chart. That way we can see what the deal is. So as the VIX is increasing in volatility, markets are dumping. Same thing. And all these volatile opportunities. And I keep using suggestive language of opportunities because there's an opportunity for every side that sees it. But if you don't, then it's not an opportunity. Boom. Look at these spikes in the VIX. Spike in the VIX. Tend to be local lows. Not always, but on the long-term basis. And that's not getting the wick, but spike in the VIX can show us through, years of information, tend to be local lows. All right, boom, spike in the VIX. And we could do this same exact exercise, not just with the Nikkei, but the S&P 500, the NASDAQ, Bitcoin, everything. Remember, it's all one trade. There's some assets are more volatile than others. So, yeah, interesting stuff, to say the least. Let's check a rotation. So let's see if people are, because here's the thing. We can look at the broad-based bond market by looking at TLT. I know I'm giving you guys a lot of stuff here, but, all this stuff works together. So TLT. Ooh, hold on. Time out. Celestia with a nice recovery. Up 10%. Interesting. Okay. I see. So holding a nice base here. Anyways, TLT. Getting sidetracked. So TLT, this is the 20-year treasury bond for BlackRock. And typically in times of fear, this is going to be going up. So once again, we see this flight to 20-year bonds ticking up while markets are going down. So we're greedy on the bond side. And with this going up, that means yields are going down. So let me take off the VIX for a second. Put this on a weekly chart. So what we know is really, like, the bond market has been trash for quite some time. Like since COVID. COVID was the top of the bond market, and it's been trash since then. What we find, lower low, lower low, lower low, lower low, higher low in June of 2024. So this is showing me people are potentially looking for some more safety in the short term. So this going up. So what we need to do is we'll take TLT, and to get a really, really good read, what I like to do, this is what I do personally. Nobody else on the internet is going to be going with this methodology. TLT versus tech. So the opposite sides of the spectrum. What's going on there? Do that ratio. And tech has been smacking TLT, obviously, people are going to go more risk on, but there's going to be these periods of time where people go to safety. And this is why I say look at the longer term trend, and we could look at the opposite if you want to make it make more sense. But so TLT is the main asset. So the bonds, BlackRock 20-year bonds. Through the years, right, people are going to go to safety, but the long-term trend is that people are going to be more risk on than anything. So to make this make sense, when we're more risk on, that means this chart is going down. So that's the long-term trend. You have these pops of where people need to feel more safety, so they'll jump more into bonds. So we have the great financial crisis here. And so what I like to see is how long do people fly to safety? And what you find out is that it's much less time than they're willing to be risk on. That's the biggest thing people need to understand in all recessions, in all times of fear, in all uncertainty. The long trend will continue to be the long trend. You're going to have these pops of deviations, but use those as opportunities. So you have this uncertainty here also in the early 2010s. But once again, that's just a few years compared to the long-term cyclical trend of going down. But like really pinpointing, and we can use the RSI to look at the strength of this ratio as well. But let's pinpoint these times. And so that's COVID, and this is the scare in early 2019. So what we do is use our tools to make it make sense. And the crazy thing is, potentially could even use something like the Hatter to look at the pivot points. That's really, really getting into it. But not as accurate for this, so maybe not. But yeah, so let me look at the RSI and look at the strength of these deviations. And so it's rare that you see people going to safety for long durations of time. But when they do, these provide really good entry points into markets. So this is letting me know that, compared to people wanting to get into like Tesla and Nvidia, they at this current juncture, especially since really July 1st, so over the last 30 days, but that's increased tremendously. If we look at the daily, it's increased tremendously. So since July 11th, and then we had a really big like push above here over the last couple of days, that people would much rather be in safety, so bonds currently, than risk on. But once again, even on the daily, we haven't seen these levels very often. If we do, it's only for a little bit, and then people get back to the risk on regime in the standpoint of 30 days later, 20 days later in a bull run. But even if you're not in a bull run, it's fine, because it tends to be local lows for any bear market capitulation. So it stays true for whatever scenario that you're in, bull run or bear run. So as you can see, 1, 2, 3, 4, 5. And this is data going back. I mean, let's keep going. 6, 7. Here, let's bring this all the way over. So in times where we've kind of been where we're at with this ratio of people wanting safety compared to risk on, and I really want to even go back to the great financial crisis, right? So really from 2010. So let's count it. 1, 2, 3, 4, 5, 6, 7. And this is number 8. So in 14 years, only 8 times where you see this ratio get to this level. And typically in short order, like we talked about, 60, 90 days, you find yourself doing a round trip where people end up going more so risk on than going to safety. And that means risk on prices are going to be going higher during that time period. So I'm hoping this ratio helps you guys. This is free sauce that I'm giving you on how to be able to assess volatility and what happens after volatility. But, this is what we're seeing. All right, let's go back. What else we got? So zero hedge. Let's see. A lot of information coming from here, I'm sure. From Biden to bonds, unmasking the template of lies. Interesting. What else? Kamala Harris becomes the first black woman to destroy the world economy. Dang. Interesting. Oh, wow. So the VIX, this is the inverse of the VIX. Okay, it's down 30% this morning. Unless you think the Fed will allow the VIX to remain at 50, which they won't. Good entry. So up 30%, take profits. If you're a trader, you're looking at all this take profit stuff. But if you're just looking at long term, it tells you that we ain't going to stay with that type of volatility for much. So you might want to, some people might go ahead and long that. Let's see. Finally, the CZ hands are out, up 10% from the lows. On surge and ETF buying. Okay, interesting. Yeah, look at that. Recovery. So S&P index, PAR's lost to less than 2%. The recovery is happening currently. We'll see if that sustains or not. Major assets hitting major levels. Let's do it. Let's see. So don't buy this dip. JP Morgan trading desk says not wise to fight the inertia. Consider tilting net short. So they're saying, hey, just keep going short. Don't buy the dip. Now, should you trust JP Morgan? Just ask yourself that. And I'm sure when they put this out, maybe a few hours ago, to date, as of right now, you'd be offsides. You'd be wrong if you would follow their advice because markets have been rebounding. Golly, I hate these large institutions. I really do. They're trying to screw us over, the average working man. Anyways, let's check the chat. So I got any thoughts? It's a lot, I know. It really is. So is there only one article on this emergency meeting? Yeah, I would like to hopefully see more info on that to see the the end of the beginning. Maybe. We'll see. Interesting. A break of the 100-day moving average for the NAT or NVIDIA, I guess. And there's a lot of things going on chain, you guys. So, a lot of movement of coins. Ethereum had a big dump, with this whole situation with Jump Capital. They confiscated some stuff, some coins from a hacker back in 2022, and it seems that they're selling it on the market, like inflicting max pain. That's why Ethereum went down a lot more than Bitcoin during this time. But then also a lot of people getting liquidated. We can actually jump to that really quick. So the liquidation map, let's refresh this. A lot of different topics here in the stream. Hopefully I'm not jumping around too much. So the liquidation map, man, if you would have seen this, like these levels through the night, I was looking at this, and they are literally getting, shellacked. A lot of longs got liquidated, y'all. But now on the short side, look at, and the short liquidations haven't really been happening, but look at what's being set up. All throughout the range, there's a lot of short positions, which helps the process of recovery be more steady. You see how much that we have, we don't see gaps in between. So it's going to be a nice congruent liquidation of the shorts if the market wants to push back on the buy side. But we need a lot of people coming to protect this price, and who knows, you might be a part of that effort. And so there's more shorts than there are longs currently. If we look at open interest, let's see, are we positive? Are we negative? What say you? All right, internet, we need to be great. Internet, don't lag on us now. We need you. I think the Fed's trying to stop us from getting this info, right? Like, nah, we need this information so we can make these decisions. Maybe this part of their side is down. And that's the thing, like, websites are going down, exchanges are going down. It's crazy when there's volatility. Nothing. Can we get some futures information? All this information just gives me more confidence. I hope so. It's all about understanding how the markets are working and moving and where you can fit in or not fit in. Okay, so it's not wanting us to be great. All right, so what we'll do is we'll move back over to the topic of the on-chain movement. And this is an interesting statement. You guys sold your coins, but BlackRock, MicroStrategy, Grayscale, Fidelity, guess what? They didn't. They bought your coins. If we are looking at the whales right now, so we're talking about, these entities or people that hold thousands of, Bitcoin and thousands or hundreds of thousands of Ethereum, all that kind of stuff. They're accumulating right now. So should you operate like them, or should you operate like the average person on the street that doesn't understand markets, who just sells stuff? And of course, like I seen that coming. Peter Schiff having a field day, bragging about gold, which I hold some, but mostly in crypto. Yeah, like he owns gold stocks. He has more gold stocks than actual gold. But of course, he's going to use this to try to pump himself up. But in the long run, gold is not going to perform as well. I mean, it's pretty simple. He has his few talking points, but they're wrong. He cherry picks, when he talks. But this is interesting. As far as they're getting inflows, not outflows, these large institutions. Very interesting thing to conceptualize, Run it back, Turbo. Let's go. That's funny. That's hilarious. Okay. Yeah, that's pretty funny. Yeah, pretty much. Lay it out on the line. Yep. That's how it is. You see all these fiery darts, and when you just been in the market for a while, you're like, I've seen this a time or two. and you find out, yep, everything is all good. Like that face that he had is literally the face that you'll have. Like, oh yeah, everything's fine in the long run. In the long run, Peter Schiff. I don't follow this guy. What is he talking about? Never have so many been so wrong about so much. Huh. I mean, this guy, hypocrite to say the least, man. Truthfully. And we can go and look at that. Look at the CME and see, what are people thinking for this rate cut in September. Markets are now pricing in near 100% probability of a 50 basis point cut in September. Huh, interesting. I think that comfort caused a knee-jerk reaction to buy the dip. But that's too little too late, especially when any hotter than expectation inflation data could, lower those odds. Sell the rip. So he's saying sell it. Okay. He's saying, just for clarification, I'm referring to risk assets like tech and crypto. Of course, that's what he wants to focus on because these are the areas, or these are the two asset classes that are going to outperform, and they have been outperforming gold for a very long time. So he's going to talk against them because that doesn't help his cause of trying to pump gold. Stagflation is still the biggest risk. So cash is not safe, of course. So value, dividend paying stocks, as well as gold. And the miners are still buying. Okay. So he's saying that, buy some dividend stocks and some gold and, mining companies of gold, and you should be okay. Like, okay. Interesting. Yeah, he's got a lot to say, but I really don't care to read all this stuff, to be honest. Yeah, I mean, non-factor. Bob Lucas, what is he talking about? So I did also say this a few weeks back, and, we did lose 53K at the last weekly cycle low, which would generally point to a downtrend in play. So it's not all roses. Some doubt has crept in. My cope is the forced selling nature of this market pushing it there more unnaturally. So not being a crypto sentiment or fundamental event. Interesting. I mean, he's potentially plausibly thinking that this is not a structural issue. It's just, hey, some short-term fear, essentially. And now he's trying to say, I'm on vacation. I don't want to have much to say. Yeah, okay. But you're going to have a lot to say when you're talking about, I was right. Like, all these guys, man. Just in, Europe's fourth largest hedge fund. Okay. They're talking about they got some, Bitcoin holdings, 500 million spot. It's pretty cool. Good for them. But yeah, look at this. Woo! And that's why I was trying to show you guys this chart. $1.2 trillion liquidated. Yo. From the cryptocurrency market in the past day. I didn't get a lot of sleep last night. No, that's hilarious. But yo, that's a lot of money movement. A lot of people that get caught playing with leverage. Shame on you. Stop doing it. Because these things happen. Yeah. Yep. Just reaffirming that, the big guys, they haven't sold anything in, this last trading cycle. So our best bet is for the Fed to print. I mean, they have to do that at some point. The expedient nature of under which when they may, that's going to be on them, depending on what they assess the risk and the true, bad nature of the economy is, which they'll decide. It could be now, it could be in a month, it could be in 3 or 4. But nonetheless, typically we'll find that, they're going to start putting that on the table much more now versus than before. So that's a good sign for markets in the long run. Cool. So, there's a lot of little stuff. We've been on for an hour. I'll stop there. I have more detailed info that, I'm going to be, definitely giving over the next, few days on the Patreon. So if y'all want to go ahead and get access or just kind of come hang with the guys, definitely, yeah, go ahead and click that join button. Link is in the description. And yeah, we've got some developments. I'm looking at a lot of new stuff and looking at, possibly where to place capital here over the next day to 7 days, give or take, and looking at asymmetrical risk returns, looking at compound annual growth rates. So a lot of things to consider that are on the table. You as a sovereign individual, hopefully you're putting in the time and research. And if you need some help, consider joining the crew. But I appreciate you guys. I'm going to jump off right now and we'll get back to business. And yeah, stay safe out there. But don't just think about safety. Think about making your life better. And we might have some opportunity to do that. So that being said, I'll catch y'all in the next stream. Peace.